Thanks a lot for speaking to us once again right here on
Thank
ET
you very
Now,
much.
and
Very nice seeing you
such a
again.
pleasure to interview you all over again, almost a year later. But you know, the world in 2016, and everybody's been talking about it and scripting change and all of that. But I want to ask Nassim Taleb, what are the 5 things or some of the things that are keeping you awake at night as far as the world that we live in?
I mean, the things that keep me awake at night are things that are not financial. Financial things are interesting, but I don't think that a financial crisis is necessarily a bad thing. It is not, it's unavoidable, but because many financial crises have led to the improvement of the system and to the system getting better. Okay, so you have to realize that without financial fluctuation, people become very complacent. So let me tell you what I think people may be worried about, not all of us. It's probably going to be good news for a lot of it, maybe good news for India, like commodity prices having a huge pressure on them. Mostly because we finally, I mean, we're talking solar, marginal improvement, and now finally we're starting to see the light.
That's right.
That perhaps, and it doesn't take much for commodities to collapse or to have pressure on them. So maybe not this year, maybe not next year, but at some point we're going to really dispense with many of the oil application, and that will lower the price of oil. Why? People don't realize that the marginal gain in the commodities, and having been a trader, you know, all my adult life, most of my adult life, you know one thing is that the commodity goes down 30%. Sometimes you can have 2% excess supply.
That's right, yes.
And this is what pretty much has been happening now. Another interesting fact, and not necessarily a bad thing, is Saudi Arabia having a huge deficit on, if you take last year, oil was maybe 50% higher on average.
That's right, yes.
Yet they had a huge deficit, something like between 8 and 16% of their reserves.
True, yes.
So, if oil stays the same this year, they're going to be crippled, and that may not be a bad thing.
Why do you say so?
Because it will slow down their funding. You know, certain school of thought, let's put it this way, that is not that traditional and funding indirectly funding or a method of thinking that promotes terrorism. Okay, their way of the way of thinking is not too different from ISIS. So
is Nassim Taleb here suggesting that low oil may actually help in reining in global terror?
Yeah, definitely, because a low oil price these people will have to cut costs, and of course they're going to stop promoting the Wahhabi intolerant version of the religion, and of course the old traditional ways will come back, because it's not a traditional approach to that religion. But another thing will happen. Low oil prices, of course, are going to be good for countries, or I mean, unless you own oil stocks, it's going to be good for you, because you're going to see your bills, and has been helping us quite a bit in an environment where we have a world with very high debt, has not been cured of debt in spite of the crisis 2008.
That's right, yes.
And a world that has way too low interest rates, and interest rates we are realizing at 0%. There's no evidence it's much better than interest rates at 2, 3, 4%, and they're realizing it. So the putting back interest rates in line with what they should be, a process started by this wonderful person, the new Fed chairperson.
That's right.
Yellen. It's a wonderful, but however, it may be very rocky. Maybe not for the United States, but for places where people have invested.
I will just get to U.S. Fed in a while from now, but I just want to ask a follow-up question on oil prices. We did say that oil prices are low. Do you see oil bottom out from here, or do you see prices crash even further?
Every time I talk to someone in commodities, they say, "Oh, we hit bottom. That's it. This can't go worse." And when people say that, it means that they have they are very long.
That's right, yes.
They are choking on it. And then there's also an indication that this won't happen in the short term because we have a huge amount of the glut is very expensive to store oil.
That's right, yes.
Which means that the storage capacity has been depleted, and that is a bad indication, you know. But I'm saying oil may rise, but in the long run, the problem is the long run. It's not now. The short term is the long run. The long run is not very good for oil, and eventually, it's also agricultural prices may at some point people may come to their senses and realize that biofuel is not the smartest idea.
That's right.
And if solar will give them an excuse to cut down on that eventually. So in the long run, and you know, releasing so much land will really put a lid on these.
So oil has this obvious repercussion on the geopolitical crisis that you alluded to earlier. We've seen sanctions being lifted from Iran. There will be more supply that will be coming in. When do you think producers are going to blink and say, we can't take this turmoil anymore, we're now going to cut down on production?
The problem is long term. If you cut down on production today, and you know eventually that it's not very politically correct to drive a car.
That's right, yeah.
I know myself that I own a hybrid in America, and not because of any economic or even intellectual justification, but just so my children would respect me.
Exactly.
Right? So I own a hybrid and I have to switch to electric, even, although you know it's dubious whether there's a direct payoff. So or the direct improvement, because these cost you know, energy to make. So there is a long-term trend away from fossil fuel, and that long-term trend, I'm saying, is that they see it. They see that oil. I mean, they may have other uses, making chairs, making cell phones.
Right.
They have other application, but that's not in the cards now. So they just realize, hey, you know what? You know, you sell it before you know, when there's still people needing it.
I must ask you this question though before we move any forward. The geopolitical tension that the world is seeing, whether it's Russia and Ukraine or whether it's you know, the Middle East region exploding almost. How do you see all of this play on the global economy? I know you did say early on that global financial markets are not too worrying because they're volatile. I'll come to that in just a bit. But can Middle East roil world markets?
No, I mean, think about the Middle East. They're not fighting. They're not going to fight anytime soon. And low oil prices will prevent Saudi Arabia from
fueling.
I mean, look at it. A lot of the financial problems part of it largely come from a war in Yemen, where people in Kalashnikov are beating their jet fighters and their mercenaries. So that's what we're. Let's look at the world. Russia and the United States may be at tension, but you still have, you know, a huge amount of technological, you know, work done. So it's a weird situation where it's not a Cold War. It is some kind of sort of like two friends sulking.
That's right.
Still working together. They're sulking, but they're working together. So there's something. So it's not that bad.
So what will these sulking friends mean for the world economy?
I mean, I don't think that these relationships between matter much. I think more it's a complex system. Meetings between heads of state and all that.
Right.
It's pretty much noise and entertainment. And I think that ISIS isn't a big deal. It is a big deal on TV, on YouTube, and stuff like that. But the big deal that we have, and that way probably is two big deals. The first one that's very visible is, of course, the policy of the Federal Reserve.
That's right.
Because the Federal Reserve, it so happens, is a U.S. institution that follows U.S. public opinion, or U.S. whatever, political opinion, whatever it is. It's supposed to be semi-independent, but you know, is not interested in what happens to holders of Thai bonds.
That's right.
All right. So the Thailand, you know, although you know they probably, when they raised rates in 1994, eventually they impacted emerging markets vastly more than U.S. markets.
That's right.
Okay, and it took years, all right, to resolve that that crisis. So because a lot of people have invested in things, and now they go back to the U.S. dollar. So this is the first one economically. Okay, and this I would say is worrisome, but in the long run, people will learn not to depend too much on U.S. Policy, Fed, and stuff like that by having a much sounder structure. But the thing I'm really worried about, tell me what worries me at night, and it worries me at night. The thing that worries me a lot, is that the response to Ebola was not impressive. When we had Ebola last year, people were complaining, oh,
the world didn't come together.
They didn't understand it's a multiplicative problem, and the multiplicative problem needs to be dealt with at the root.
That's right.
And you need to be hyper-conservative and paranoid about it. And a lot of journalists in the U.S. were making fun of those worried about Ebola. If you have something to, of course, we should not worry about things that are not multiplicative. And people were saying, well, more people drown in their bathtub than died of Ebola. That's true, okay? But you cannot have 1 billion people drown in their bathtub.
That's
but
right.
A disease like that can kill. So you have to look at what we call the tail properties. And I was very disappointed with the State Department's reaction to Ebola. Instead of stopping immediately, the flights from Africa till we figure out what's going on, they said, well, they put diplomatic relation above the safety, and then you see people once they leave a place, they multiply.
And that's something that worried you, and
that
should have worried
me. The reaction worried me.
Yeah.
So the next Ebola, they're not going to know how to handle it properly because they don't have their act together, and the public opinion, or it was manipulated by journalists to say, oh, we overreacted. We didn't overreact for Ebola. We underreacted.
Right. Yeah.
Now we have another one, and maybe resolved or not. The Latin American virus.
That's right.
But or the mosquito-borne this time. But another one can come. So this is what worries me about, is that the world is becoming a lot more interconnected. With
and yet in our policy formation, we are not so interconnected.
In we have a lot of policy that we're interconnected that waste your time. Okay, like and they don't have global policy to deal with these contingencies that are properly in place, and the reaction by politicians, the reactions are not as healthy as we would like them to be.
I want to still go back to the U.S. Fed and what Janet Yellen has done. I mean, after a lot of back and forth, will she, won't she? She has raised rates finally, and world markets did take it in their stride. But given the turmoil that the world is seeing, whether it's oil on one hand or whether it's China that we will speak about next on the other, do you see Janet Yellen raise rates anytime soon?
Okay,
and when do you see the next rate hike happening?
Let's worry less about China. Maybe if I were Chinese, I'd worry about China. But China doesn't buy much from the rest of the world. China sells to the rest of the world, so you don't have to worry too much. A slowdown in China isn't as dramatic as a slowdown in the United States.
That's right. Yes, I'm just going to talk about China later.
Yeah, but I mean, I don't quite understand China. I don't know if. Because the stories I get from China are very confusing. But you have to see the repercussion from something that happened in China. You have to still realize that where China is today compared to where it was 10 years ago. Okay, and what financial crises are not going to unwind all this economic improvement and lowering of poverty and stuff like that. So we're not talking about something profoundly dramatic in the physical world.
That's right. We'll talk about China later, but the U.S. Fed.
The U.S. Fed in 1994, Greenspan raised rates quite violently. It's the same story. They had lowered rates, and they felt they lowered them too much in response to a real estate crisis.
That's right.
That was handled much better. They put some people in jail. Keating went to jails, and also they had an RTC. They lowered the debt. It was handled much better than this time, and they raised rates abruptly. Okay, I remember people invested a lot when it was low U.S. interest rates in emerging markets, but even European markets like Portugal, Spain, and particularly Italy, and of course these markets got hammered completely and they got caught, and it's the same. It's a replay today that's happening. So these markets will be held, but there's something quite critical about quantitative easing and all these things. They realize that low rate policy is not helping pension funds, is not helping the retirees.
That's right.
It is helping mostly. It did help a lot of the very wealthy people, and it increased the value of assets for these wealthy people. So really it increased inequality. And inequality now is a big thing that people discover that, oh, we have inequality. So the problem with what has happened was the last 7-8 years is 7 years low interest rates led to a lot of speculative built up in
but
real
do
estate.
you see her press the button more than some people like anticipate her
This
to?
I don't know. I don't. I'd like to talk technical things, but
Right.
I'm always wrong on short term. So I'm always wrong on
Right.
short term, and I'm happy to be that way. So
Right.
this is why I know myself. So long term, we're gonna have to have higher rates long term, and I think that we already are witnessing the upper end of the market.
Right.
Real estate, for example. The wedge between these apartments that start having zeros on their like effortlessly.
True.
Like in London in Knightsbridge or in New York, these new towers compared to the middle class, what the middle class has that has not been improved. So this will collapse completely, I think.
I must ask you a question before I move any further on the U.S. economy. A lot of people believe that yes, the economy is recovering, but some others raise doubts on the robustness of recovery.
So let's the companies are doing very well in the United States. Let's put it this way.
That's right.
That's what matters. Individuals aren't doing as well as companies. Okay, that's okay, but that's structural. And we're facing longer term and more structural problem, which is that dispensing with humans to have them replaced by machines. So therefore, if you're making a machine, you're going to make a lot of money. If you control a machine, you're going to make some money. But if you're replaced by a machine, you're going to be permanently unemployed.
Right, yeah.
So and you're going to have a shifting of skills toward that. That's history,
Sure.
So are we sharing the benefits of the improvement? No, you don't have a trickle-down effect. And a lot of populists now are coming for some kind of redistributive measures, raising taxes on the rich, doing this, doing that. So we'll see some social turmoil coming from that. So that's pretty much what we see in America now. A shift to the left, as you're seeing. Even Donald Trump
is talking about
talks about stuff that are typically on not part of the Republican
agenda.
Yeah, exactly.
I must ask you about financial markets because we began from there, and then a quick last question on India. You said financial markets are in volatility, and it's only good because reforms will come out of this. Is this volatility here to stay? Because a lot of people believe, why are we using this euphemism volatility? Things are just going down.
Okay, you're right. People tend, there's one thing that you notice, that people call markets volatile when they go down.
That's right.
But not when they go up. Okay, this is it's not a euphemism, it's just in their mind, they don't feel the volatility.
It's just comforting, perhaps.
They don't feel the volatility when things go down. Okay, in the long run, if you are running a country, you want to be robust to finance. And depend on physical reality more than a financial reality. So if financial markets are weak, it forces a lot of sectors to be much stronger and depend less on financing. And actually what people don't know in history is that the rate of growth, take Silicon Valley when it started. These people did not start financially, you see. And actually the financing came way later.
That's right.
And when they didn't need it.
True.
You see, people only gave them money when they didn't need it. So India has a lot of potential human skills level, and that's the wealth that you should focus on, not current financial markets.
I must ask you a question on India. A lot of people in this session and otherwise around the world believe that in a gloomy world, India is a beacon of hope. I must ask you a very candid answer here. Do you believe that assessment is true, or do you believe us Indians are a little too despondent about our own selves?
No. I think. I mean, this is my fifth or so visit to India, and I remember from between 2008 to today, you see huge, like structural improvements.
True.
That have airport in Delhi and stuff like that that you didn't see before, but also at the the economy level, you seem to be more insulated from the rest of the world. And you are your own world, and things are better today than they were a few years ago. And you're getting rid progressively of the metastatic bureaucracy that had plagued India in the past.
That's right, yes.
And it takes a while. I mean, as they say, science evolved funeral to funeral, right?
That's right.
So people retire and things get better. So I think that it's sort of like I mean, you're a continent, all right? You're a continent. You have your dynamics, internal dynamics that matter more than the rest of the world. So
what, according to you, works for India in this global gloom? Because some people have also pointed out that there is a lot of political logjam on some of the economic decision making. Is that something?
I don't follow details.
Right.
I look.
But what works for India amidst this global gloom?
Overall, the world is interconnected, but less interconnected, for the bread, for things like that, all right? And you have a lot of assets that you're discovering now. You have a huge amount of technological assets, in human technology. You just have to increase the risk-taking on the part of these individuals. You've been supplying the world with software and items that I mean, I would say it was trading. Go with the winning trade.
True.
And it's a winning trade. And software, okay, sales will go up or down with the crises, but overall, in the long run, you keep going higher and higher.
True.
There's a lot of things that you can, you have cheap labor here compared to the United States, especially for high-end technological stuff.
Yes.
And of course, a language sharing a language with
there isn't a language barrier. You can be connected to the world.
Exactly. So there is no. So what I'm saying is that you connect nicely to the rest of the world, but you don't need that much to the rest of. I mean, you don't need. You're a continent on your own.
I must ask you a last question. Amidst this very volatile world, and I continue to go back to that word volatile, and oil crash, and a China, and a U.S. market, and of course very botchy recovery in the U.S. and the emerging market crisis. Are there any pockets of hope for the world that we live in?
I mean, to start again, I mean, we're talking about things that are hugely cosmetic. I mean, look at where the world is richer today with a poverty level way lower than it was 15 years ago.
That's right, yes, it is.
All right, so you got to look at where we are today versus where we were in the past. And no economic crisis is going to set us back that badly, right? Nothing. What can set us back is a virus or something like that. That's what you have to worry about. Forget about the economic thing. I mean, I understand that you deal with economic times, but the impact actually is a true impact long term on economic life may come from things
that are non-economic.
Not economic, and it's not ISIS, all right? It's more like viruses or things like that. Okay.
Thank you very much, Nassim Taleb, for your time once again.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.